Cool. Thank you. Good evening, everyone. I am Manish Bansal, and I will be hosting today's webinar, which also marks our fourth webinar since we started last year. As people are still joining, we can see it. I would like to say thank you to all who have joined so far, and to those who will be listening afterwards. In today's topic, we're going to discuss about SMSF. There has been many interests in this topic, and I can say it just because of the heavy restriction we have received so far. Now, in this topic, in this webinar, we will discuss about SMSF structures, some lending rules within the SMSF, and then some strategies which we can be important to purchase a property, right? This particular discussion and some insights will be given by an accountant, a broker, and a buyer's agent. So before I move on, I would like to cover some few housekeeping rules. Today's webinar is being recorded, and we will be sharing the recorded link with everyone. Please be on mute when speakers are presenting or discussing. Videos is optional for all attendees. There will be a Q&A towards the end of the webinar. Please use the chat box, just type in there and we will go through them at the end, right? If there's a shortage of time, we request to reach out offline and we will be able to provide answers to your queries. Dinesh, can you move to the next slide? Okay. So in today's webinar, we are going to cover a few topics, right? So the first thing would be who are our speakers. There are a few people, as I mentioned earlier, who are on our panel. They are. What are the roles and responsibility for each of the people? And if there are any other persons, any other professionals who plays a role in SMSF, we will cover it. There will be a few more topics we will cover up, like what are steps to buy a property under a LRBA, right? What are the benefits for SMSF? What are the typical structures it looks like within SMSF? So, some property investment we will cover up. LRB arrangement we will cover up, that will be taken care by the accountant. Some rules, benefit we will cover up, and then we will slowly move towards the lending part. In the lending part, we will cover up how the lending journey looks like, what's the serviceability. We will cover up some sort of case studies as well. In the end, we will cover up how a buyer agent can help out in your purchase within the SMSF. Some examples will be shared, and in the end, we will cover up the we will take up your some frequently asked questions. Dinesh, can you move the next step, right? So let's start with a small introduction about our speakers who are on the panel. So we have Ankur on our panel, who's an accountant, and he has great expertise in SMS structure. I will request Ankur to introduce himself over here.
All right. Good evening, everyone. So yes, my name is Ankur, and as Manish said, I've been working in this area for many years, so over 20 years, and helping trustees, with the compliance matters and also formulating strategies with the financial planners in this area. I have presented on many topics over the years, and there could be a day when I don't get a chance to talk to my wife, but there isn't any day when I don't talk about super. So that's how exciting my life is. So today I will be sharing some insights as to investing in property and the structures side of things through the SMSF. So yeah, pleased to share my experience, and look forward to the remaining presentation.
Cool. Thanks, Ankur. Dinesh, can you move the next slide, please? Now we also have Dan, who is a broker, and he has helped many by providing the right guidance toward the SMSF lending, right? I will request Dan to introduce himself.
Hey guys, hope you all well. So a bit of a background about myself. I was working in corporate for 20 years. I worked in finance, telco, and government sectors prior to becoming a mortgage broker. What I do is I specialize in helping investors build wealth through property by providing credit advice. Now, as a mortgage broker, what I do is basically I've settled almost $350 million, 350 properties transactions over my career, and I've settled almost $250 million plus loans. So I've received recognition from the bank. I've achieved platinum and elite status, and also I have been nominated as a Rising Star finalist for FY 2024. That's me. Thank you.
Great achievement, Dan. Great achievement. I love it the way you just mentioned it. Moving forward, we have Dinesh as a buyer's agent. Would like to ask Dinesh to introduce himself as well.
Hello. So I'm a buyer's agent from the last 3 years. So me and Manish we collaborated last year. We have helped maybe more than 200 clients buying properties and maybe like 30-40 clients buying in SMSF. So we specialize in building portfolios. We help people buying properties under different structures. So that's why we are covering this SMSF today. So yeah, over to you, Manish, bro.
Thank you. And lastly, it's me, Manish Bansal. I'm one of the directors in PropXperts and also a buyer's agent. People who knows me, I'm also very active in PFA. But in terms of PropXperts, my role is to build up a strong trust between the clients. Advise the right strategy that can be best for them at the same time. I help them to finding the right property in the emerging markets. Right. So this is more about the introduction about all the speakers on the panel. Let's move to the next slide, please. So before I start further, right, I need to read about the disclaimer. The full disclaimer is on the screen, but I want to read the shorter version. This webinar is general in nature, and the information provided in this webinar does not constitute any financial, legal, property, taxation, or accounting advice. We have not considered any individual circumstances, and any information shared in this webinar should be independently verified with a qualified professional. Always seek professional advice to ensure compliance and suitability. Right. Full disclaimers on the screen. Please go through it. Next slide, please. Now let's have a look on who are the key professionals in SMSF and what are the roles and responsibility. Broadly, what we know is that there are four main professionals, starting with financial planner. Now, to invest in SMSF, financial planner should be reached. Their role is to identify your goals and provide financial advice. They advise which asset class can fit your goals. Right. The second person, which is an accountant, once from the financial planner, once the goals has been identified along which asset class we need to invest, this SMS structure has to be set up. This is something which is done by an accountant. They play a great role over there. They help to set up. They help to set up different trusts. They help us to provide later ongoing support within the year and throughout the year, keeping SMSF compliance in mind. Now, in some scenarios where asset class which has been decided earlier, which has been recommended by financial planner, if we need a borrowing, at that point we need a broker. So the role of a broker is to give you credit advice. They can also give you advice on the best rates by comparing with different lenders, and they help out to secure finance for this asset. Right? In the end, if the class asset which is being suggested by a financial planner, or if you make your mind, if it's identified as a real estate, you also need a buyer's agent. And the role of a buyer agent is to act on your behalf to define the right strategy for the purchase with an SMSF. They identify right property, they negotiate on your behalf and help in securing the deal for you. Dinesh, can you move to the next slide? Cool. What is SMSF, right? I would ask our accountant, Mr. Ankur, to please go from here.
All right, so let's start. So I think many of you probably already aware of what is an SMSF. For those who don't know, it stands for Self-Managed Superannuation Fund. And as the name says, it is a private super fund that you manage yourself as a member and a trustee. So most of you probably are with, say, Australian Super, Aware Super, Care Super, many other super industry funds. So the difference between that and an SMSF is the SMSF is a fund that you manage yourself rather than someone else managing for you. So at present, your employer contributions goes in the fund. They invest in the various securities depending on the investment risk profile you have chosen, and the credit just goes to your account at the end of the year. Within the SMSF, you do all that with the help of obviously professional advisors and the accountants. So what are the main benefits of the SMSF? The first one is the obvious one, the tax benefits. So all the income held in the fund is taxed at 15%. So what is the income? For example, if the fund has invested in the real estate, so rental income is the income, then the fund could have some listed shares, so there's a dividend income. Your employer contributions, salary sacrifice contributions, and personal concessional contributions are also an income on which the tax is 15%. Then we minus all the expenses like accounting fee, audit fee, regulatory fee, financial advice fee, property expenses, interest expenses, and whatever left is get taxed at 15%. Without any Medicare. So the tax works differently in SMSF versus in your individual return, where we pay progressive rate of tax. Within the SMSF, it's 15%, and that's it. It gets better for the capital gain. So for example, I'm 42 years old, I buy a property and I sell a property and I make $200,000 gain on it. So what is a capital gains tax? This is also a common question asked every now and then. The capital gains tax is 10%. So I buy something for 400, sell it for 600, 200 gain. The tax is 10%, flat, no Medicare, no progressive. And even better. So if I retire and my wife retire and we both are the members of the super fund, And let's say we both are in pension mode. That means all the assets held in the fund are in pension or retirement mode. The tax is 0%. So this is the obvious benefit of having an SMSF, and it gives you the tax benefit at which you can't achieve outside the super fund sometimes. The other benefit is investment control. So as I said, as a trustee would be deciding what sort of investments you're going to invest in, whether it's a property, whether it's crypto, whether it's gold, silver, listed shares, widely held trust, unlisted trust, you name anything, you can hold that through your self-managed super fund, where if you're with Australian Super or industry fund, you cannot choose those investments. So if you call Australian Super, say, I want to invest in gold, they'll say, go away. So that's the benefit that you get as a control within the SMSF, like you decide where the money needs to be invested. Estate planning, it's a great vehicle for estate planning. For example, let's say, me and my wife has a super fund and there's a commercial property in it. Upon retirement, I set up a pension, and let's say I set up a pension as a reversionary pension. That means upon my death, my wife will get my pension. That means if I was to pass away in my old age, my wife will get my benefits as her pension. And then the fund doesn't need to be liquidated. The property can stay there, and my kids can also join the fund later on, or even now. And then hence it becomes kind of like a family vehicle where it can run for generations. Flexibility, accumulation and pension accounts. So again, touched on earlier. So for example, I want to retire in my retirement age. My wife wants to still keep going. So there's nothing stopping you to have a mix of accounts running within the super fund. So I could be in retirement mode. That means any income that is attached to my balance will be exempt. And my wife is in accumulation mode. That means only we pay tax on her portion that is still earning the income. So it's a beauty of the flexibility that you can design it the way you want it, depending on your retirement needs. Asset protection, that's another benefit of having an SMSF. Usually the creditors will not touch the assets within the SMSF. So if there's any bankruptcy or anything, so the assets are generally protected within this environment. Next.
Just a question here, Ankur. So you said 15% capital gain tax, right? So that reduced to 10%. I think it's a 1/3 of discount.
1/3, yes.
If you hold more than 12 months, right?
Yes, the same rule applies. So if you held more than 12 months, the capital gain discount is 1/3. If you 1/3 it and then apply 15%, it equates to 10%. So that's why I said it's easy to sort of, rather than doing 1/3 and then 15%, if you go straight 10% on the gross gain, you will get to the same figure.
Makes sense. Thank you. So going to the next one.
Typical structure of an SMSF. So again, SMSF is also like another trust. So every trust has a trustee that runs a trust. So super funds are exactly the same. So you see in the middle, I've got Fund Family Super Fund. It's got its ABN. It will have its TFN. The fund needs to prepare the financials, lodge a tax return. Everything happens in that sort of middle entity. Then this fund is run by a trustee company, which is Fund Family Pty Limited. So for a husband and wife, if they are the members of the fund, there will be also the directors of this company who are running the fund as a trustee under that company. On the left-hand side, put 6 members. So previously it used to be only 4 members. Recently the law says you can have up to 6 members in the fund. So it could be your children or any other people that you want to, be in the fund. And it can hold many investments, as I said. It could be term deposits, cash, listed shares, unlisted shares, crypto, property, and all those sort of things, and insurances. So this is how typically an SMSF structure looks like. You can also have individual trustees rather than having a corporate trustee. And Dan probably will touch on later on that the banks don't like funding or lending to the fund where they have individual trustees. So it's always beneficial to have corporate trustees. So for example, you start up a fund with 6 members and 6 individual trustees. One member wants to leave the fund. You have to change the title on every single investment held in the fund, update the deed. So it's always beneficial to spend a little bit more money at the start and have a corporate trustee, because later on you can just remove the director from the company and the structure continues as is.
So, Uncle, the question is, for example, I have my SMSF. We are 2 directors at the moment, right? It's me and my wife. So in the future, I want to add my daughter. Is she can be the 3rd director in the future? Or
Yes.
Yeah, okay, makes sense.
The rule is every member needs to be the director of the company, unless, if your daughter is under the age of 18, that we call it legal disability. So then, yes, she can't be a director on the company. But generally, all directors are the members of the super fund.
Okay, makes sense. So you can change the directors. So you can, yeah,
Yes.
sounds good. Great.
Next slide. All right. So as I explained earlier, so there are many investment options, under the super fund, whether it's listed shares and all that. So today's focus is mainly on the property. So I'll talk about various options available under the super fund to invest in property. The first one and very common one is LRB arrangement. So this is basically a technical word that's referred to when you go borrow from the bank to invest in the property. We call it limited recourse borrowing arrangement. And why is it called limited recourse? Because when the borrowing provisions were introduced, the government said to the banks, hey, bank, this is for people's retirement money. We don't want you to touch any other assets held in the fund. So I could have a property under loan, then I could have ANZ, BHP shares and gold and all that. And the government saying it is for retirement money. So if the fund make a default on the payment, repayment, then your recourse should only be limited to that property. So hence, it's called LRB arrangement, that the bank cannot touch any other assets held in the fund apart from the property. But the banks are also cheeky. They will ask you to provide personal guarantees. So that means they go other way around. So Dan probably will touch on a bit later on this topic. The other option is tenants in common. So let's say we don't want to get a loan on the property. My fund has $500,000 in the bank account, and I have $500,000 sitting in my savings account. There's nothing that's stopping you to go as a tenants in common and buy $1 million property, and then there's no borrowing. Just like you will buy, say, a property with your friend. Similarly, the fund can do the same. And same applies to the partnership. So there's, Dan could have his fund, Dinesh could have his fund, Manish has his SMSF, I have my SMSF. 4 SMSFs can go buy a property under the partnership. So that's also doable. The main thing we need to look or be careful within the SMSF, everything has to be on arm's length. So, and because it is for retirement, and whenever the fund goes through the audit, they apply the first test, which is called sole purpose test, which means any investment held in the fund, the only purpose of that investment should be to provide the retirement benefits for the members. Once you deviate from that rule, then the contraventions happen, and then the ATO comes hard on you and then start penalizing, or in some cases, disqualify you as a trustee. Unlisted trust. This is another interesting vehicle which is used for buying properties. And like I can spend all day on this because this is where it gets more complicated, where we set up a unit trust, the fund invests in the money in the unit trust as a unit holder. Then let's say me and my wife also inject money into the unit trust as a unit holder, and then the unit trust then goes by the property. And there's different rules about the borrowing and all that, because there's a related trust, not allowed to borrow. So I won't go too much in detail, but it's just to sort of put it there that that bank is not the only option. So there are many vehicles that can be used to invest in the property through the super fund.
Yeah, I know someone, Ankur, in here, like, for example, he has a 300K in super and 300K personal. So they bought in a unit trust kind of thing. And half units belongs to the SMSF and half unit belongs to them, right?
Yes.
And you can transact those units later on when you have more funds in super?
Correct. So this is called, in technical language, 13.22C trust, where the related members of the super fund are also, investing with their personal money in the unit trust. The main thing in this trust to be careful of is this trust cannot borrow money, and it cannot hold any other thing apart from the property. The moment it buys a one ANZ listed share, it's breached the rules, and the entire trust needs to be wound up. So this is how simply you can trip over the rules. So hence the expert guidance, your financial advisor or the accountant, you should always consult them before doing anything in this area.
Good. Thank you. Next.
Okay, so let's focus on LRB arrangement. And as I touched again earlier, that it is for when super fund goes and borrow money from the bank. So we see on the top, there is an SMSF. On the left-hand side, we have the bank account of the SMSF. So when the fund enters into this arrangement, the main entity is still your super fund, which makes the repayment of the loan. The lender lends money to the bank, and then the tenant pays the rental lease to the super fund as well. So everything happens within the super fund. Where it is differentiated is where the bare trust comes, because as I said earlier, the government wanted banks not to touch any other assets of the fund. So hence, to distinguish between the other assets held in the fund versus the property which is under the loan, they created this called bare trust. So as the name suggests, it's just a bare trust. It doesn't have ABN. It doesn't have TFN. It doesn't need to lodge a tax return. The only role of this bare trust is to hold that title under the bare trustee for the beneficial ownership of the superannuation fund member. So once this structure is set up, then we forget about it until the loan is paid off. And when the loan is paid off, then the title, which is held under the security trustee or bare trustee or custodian trustee, will be transferred to the trustee of the super fund. So it seems complicated, but again, once you go step by step with your advisor or the accountant, it's daunting, but yeah. Once you start working through it, it's not that hard or it's not that complex. So just to summarize again on this. So if you're starting a super fund, you will have an SMSF, and it has a corporate trustee that runs a super fund. Then you go buy the property. That property will be held under the security trustee and under the bare trust. So there's 4 entities we're talking about. But ongoing compliance, everything happens in the super fund. That super fund is the one who's going to lodge a return. It's going to have ABN, TFN, everything. All the other structures are just there to support that structure.
So Ankur, question is here, we have here SMSF, right? And you decide to buy a property with finance, and then there's a bare trust below that, right?
Yep.
And then you decide to buy another property. So it's another bare trust coming in the picture, right? So SMSF remain like this, and you have few bare trusts going in.
Correct.
Right?
You can buy multiple properties. And yes, every time the fund buys a property, there needs to be a new bare trust that establishes the relationship between that property and the fund. But the good thing is that security trustee that's holding the title, we don't need to set up another one. That company can be a company that's holding multiple titles. So if you buy property 2, 3, 4, all that can be purchased under the security trustee that we already established. The only new entity that will be established every time you do a second, third, fourth property is a bare trust.
Makes sense. Right. So is it something, it's a SMSF and a bare trust, is that something parallel that you can have another SMSF as well with someone else, or you go into that arrangement?
I think Dan can touch on that one, whether the 2 SMSFs and the bank will lend money under the one bare trust. I think it's unlikely. Dan, you want to answer now?
Yeah, so basically the way it works is you can have multiple SMSF as well, provided that you've got borrowing capacity.
Yeah, makes sense. Yeah, thank you. So that's that. Next slide, I'm good.
Yep. Okay, some rules, benefits, and risk. Again, look, the LRBA is a very wide area, even though it looks like, okay, we're just buying a property, but buying a property under the super is slightly different to the when you buy it under your personal name or in family trust or any other structure. For example, the first one, single acquirable asset. That means any property that we're buying under these borrowing provisions needs to be on one title. So like the first one I did back in 2013, the client bought a property in Reservoir here in Victoria, and the laneway in the property was held under a separate title. And NAB's legal team identified it when close to a settlement, saying, there's 2 titles on the property, we can't lend the money. So then we had to come up with another contract where we bought that laneway outright for $10,000. So then the property can settle under the main title. But again, there are properties where there are 2 titles, like car park. One cannot be solved without the other one, so that's still doable. So there's multiple scenarios, and I think it's all case specific. But generally, a single acquirable asset, one title only. Asset must be held on a bare trust. Yes, so that's as I said earlier, that if there is a borrowing, the asset needs to be under the bare trust. So again, I reconfirm, the bare trust only comes when you're borrowing. If the fund is buying the property directly, for example, the fund could have $1 million in it, there is no need to get the bare trust and all that. So that's only when the bank is involved.
Yeah, and also if you're decided to not go into property, if you're just buying shares and something, you don't need a bare, you're just using your SMSF money there.
Correct.
Yeah, makes sense.
Repair, maintenance, and improving an asset under LRBA. So yes, repairs and maintenance are allowed. Even you can use the borrowed money to do it. And improvement is also okay as long as it doesn't result in a different asset. So for example, mum and dad, they set up a super fund, they buy a very old property within the fund. Later on, they knock it down and they want to put a factory on it. That is no, because you now change this asset from a residential property to a commercial property, and it's not the same asset, so it's a different asset. That's not allowed. So there are many rules within that. So, but there are cases where, it's a house, but then you later on put a swimming pool. Now, it hasn't resulted in a different asset. From the outside, it still looks like a house, so that's okay. So again, I can talk all day on this scenario, so there's many of them. It will be case specific.
So here question, I'm got small question here. So similar to that, if you have a house in the front and big land at the back, and you decide to put a granny flat, and your super fund have that fund like 200K sitting, and you can put the granny flat at the back, is that possible or not?
I think it is okay because it's still, by putting a granny house, you're still not changing what the fundamental asset is, still is a property. So that still should be fine. But if the granny flat is going to result in a different title or something, then probably banks won't like it. And then hence that's where we're going to have problem.
Okay, makes sense.
And the same thing going to happen if we're going to do a subdivision on the land.
Correct. While the property is under borrowing or under the loan, yes, it's not doable. But if the loan is paid off, then you can just subdivide it. There's nothing that stops you doing that.
Sounds good.
Geared returns. So again, LRBA actually helps minimizing your tax within the fund. So as I said earlier, the income tax is made up of income minus the expenses. So same rule. So we can do the same thing, but we do in our individual tax returns. We can claim depreciation, building write-off, and if that results in a negative income, and then you also have your employer contributions, salary sacrifice contributions going in, that negative income can offset that employer contributions, and then whatever left is then gets taxed. So it's kind of like we still achieve the negative gearing benefits within the fund as we will do in our personal returns. Good thing about super fund is, if, for example, mom and dad buy a property, as a, say, joint tenants, 50-50, mom goes on maternity leave. Now, under normal, your individual tax return, all that deductions or losses, negatively geared property are wasted because mom doesn't have any income to offset. The beauty of SMSF is that tax loss gets carried forward. So, for example, if the wife is not contributing or because she's not working, there's no contributions, and then we don't have enough income in the fund to absorb the deduction, it creates a tax loss, which gets carried forward to future years. So, for example, for my own fund, I did the same. So I have a property and it's negatively geared, but I didn't have enough income. But then I thought, okay, there's some losses sitting here. Can I put some concessional contributions to absorb the losses? And then I get to claim that deduction in my personal return. Yes, I can. So that means those losses don't get wasted within the super fund.
That's good.
Some considerations, I think Dan will touch a bit later on these ones, so I won't go too much in detail. Loan servicing risk and rental income risk. Obviously, if you're buying in a property, property comes with risks like any other asset, and if you're borrowing to the point and then, one member stops working, contributions stop going, then how are we going to service that loan and the rental income? So again, Dan will touch on these points later on. SIS law contravention risk, yes, because you are the trustees, you are running your super fund, the bank account just sits in your net banking just like any other bank. So, but if you accidentally take the money out for your personal purposes from the super fund bank account, that is reported as a breach. So the auditor will flag the fund to the ATO. Then, depending on the severity of the breach, then there could be consequences. Ongoing compliance issues. So on one hand, the super funds are a great vehicle, but then it comes with the burden of managing it. Like as I said, you have to keep all the documentation. The fund has to go through audit every year. You have to sign on the financials, minutes, investment strategy, everything. So yes, at the moment, if you're with the industry fund, your employer puts a contribution there, and then happy days. You don't have to worry about anything else. Here, all the burden comes on you. Obviously, you have your professionals, helping you out, but there is still a bit of work required throughout the year for that. Liquidity risk, especially during retirement. So this is, again, a risk to be considered. For example, the loan is for 30 years on the property. After 20 years, you want to retire. Now, for retirement, you need pension. So pension is going to come from the rental income, but hang on, we're still paying the loan repayment. So how are we going to retire? So then that's something the trustees need to consider, how they're going to come up with a strategy to pay off the loan before the retirement, so that that rental income becomes positively geared income, and then you can take that out as your tax-free pension.
Or other option is basically, if you are going to retire early, is that something they can sell that asset if they are in retirement age? They don't have a capital gain tax implications.
Correct.
Basically, all
yeah.
in their funds, right?
Yeah,
So,
I have a client where I asked, they bought 2 properties and they're in their 50s. And I said to them, how are you going to pay these loans and retire and all that? They're like, don't worry, we're getting a lot of inheritance, so that will help inject money into the fund and we can pay these loans off. So, you know, yeah.
Great. Next slide.
Yep. Okay, so what are the steps? So first is the financial planning, as Manish touched on earlier as well, that anything to do with super, you need expert advice. So your accountant or any unlicensed advisor cannot recommend. So I cannot tell you go set up a super fund, because why a super fund? It's all to do with your retirement. So if it does not fulfill your purpose of retirement, then you should not be setting up a super fund. Maybe some other funds are where you are at the moment. That's probably where you should be. So this is where I think it's highly suggested and recommended to sit down with the licensed advisor to look at your overall financial planning, where you are and where you want to be, and then decide. And if it turns out to be, yes, the property is the way and the SMSF is the way, then the second step should be to liaise with the financial broker to work out your capacity, because there's no point setting up the fund, paying thousands of dollars, and then later on Dan tell you, nah, you can't borrow for what you want to do, so then you wasted your money, and then you have to wind up. Engage with buyer's agent to find a suitable property. So, I've heard from many of my clients where they say they made some mistakes when they bought it themselves and those properties did not grow much, versus when they bought some properties through buyer's agents, they were happy. They were with their results, and they got them the property that's working from them, grown up in value, and that actually meets their retirement goal. So that's something I think recommended to consult a good buyer's agent like Manish and Dinesh, and they will be happy to assist you. And then in the meantime, while you're dealing with the broker and you check your finances and all that, then you liaise with your accountant to set up the super fund with the corporate trustee. He or she can help you with the rollover of your money from your industry fund, because you need that money to pay the deposit. And then you have to engage with the conveyancer, solicitors, and all that, just the usual stuff that you do when buying a property outside the fund. So initially, yes, as I said, there's 4 structures. There's a lot of work. This is allowed. This is not allowed. It's a bit overwhelming, but with the support and guidance of good professionals, I think it's very easy and doable.
Yeah, so it's highly recommended having a financial planner in there. Is that a legal requirement there, Ankur, at the moment?
There is no legal requirement as such, but yes, the legal requirement is actually on the other professionals who don't have license. Like, if I'm sitting down with the client, I cannot say, hey, go set up the super fund and then do that. But if the client is switched on, they've done their homework, they've done their numbers, they know this is the way they want to do it, they've done their own research, then, there's no...
That's their risk. Right, basically there is, right? So
yes.
Highly recommended a financial planner, but again, that's optional to anyone.
It's similar to, when I get a headache, do I see a doctor? No, the law doesn't say I need to see a doctor. If I know I have a headache and Panadol will do, then I'll take it at my own risk.
Yeah, great. So yeah, that's it. I think we are handing over to Dan here. Right? Thank you very much, Ankur. Really appreciate that. Dan, bro.
All right, cool, no problems. Thank you, Ankur, for that was great. So I'm not going to cover about the structures and stuff like that. Basically, we'll be covering. I just want to give you a end-to-end view of what the journey looks like for you, the audience here, so that the process is quite simplified here. So I'll just go through it one by one. So generally, what happens is, when a client comes to me, they are either looking or considering to buy property under SMSF, and they're not sure whether that's the right thing to do, or they have sought all legal advice and they've spoken to the accountant, buyer's agent, and they're ready to pretty much go. Right. So when they come to me, I've got it into different stages there. So review stage, you look at your super balance, you have your investment strategy defined, you have a property strategy defined as well, and then you also understand the rules around what type of property you're going to buy. So that would be the review stage. And in the advice stage, we've covered that already. As a mortgage broker, what we do is, we can provide you what the figures looks like, how much you can borrow from the bank based on your circumstances. I'll deep dive into each topic later on, but this is just a high level. So also, I'll give you the figures of how much funding is required for you to be able to secure the property with whatever the price range you're looking at, right? So once that's done, then only. Sorry, then you can go ahead and establish SMSF, because there's no point, as Ankur said earlier, that there's no point spending all this money and you can't borrow money from the bank. Then what we do as a broker is, we get a pre-approval for you. So we would like to have pre-approval upfront because there's a lot of paperwork and there's SMSF deed involved. At this stage of pre-approval, we don't really need any bare trust set up. We can just get pre-approval for you once SMSF is set up, right? Then we move on to the another stage of purchase stage. So you've engaged as agent, you are about to put an offer for the property. Then it's very critical that you're in contact with the advisor, because at that time the bare trust would need to be set up, and that's what it would go in the contract of sale. And you have to do everything right, otherwise there'll be a lot of financial implication if you have to do it all over again. That's a very important point. And then just with the help of the advisor, before the loan gets formally approved, the funds from your retail funds, whoever you're with, that needs to be rolled over to your SMSF, right? Bank generally wants to see that as an evidence in your cash management account to provide formal approval, but we can seek exception if the money doesn't land into the account at the right time, right? Then once the loan is approved, then loan documents will be issued. As part of this process, where you need to obtain legal advice as well. So there's a little bit of a cost involved there, and that's a mandatory requirement. So you bought the property, then once the property settles, all good. You need to make sure that the monthly repayments are being paid on time, so your accounts are set up properly, and the compliance side of things also ongoing. Your annual obligation for your tax and audit requirement you have to meet. So the point is that you have to involve the right professionals every step of the way. It's not just about you bought the property and you can do whatever you want with it. You have to speak to the advisor before you do anything with the property. Even moving cash back and forth, also you need to get advice. So next slide. Yep. So this slide, I was just looking at the questions that's been asked here. So a lot of people are interested in understanding how the borrowing capacity is calculated, right? So the what you see in the slide, they are the key ingredients for calculating servicing borrowing capacity. So we have different lenders who operate in SMSF. Big four banks, they don't operate it unless it's a larger deal. With the NAB actually does it, but we would be dealing with lenders who is operating in that space. So first point is concessional contribution, right? So at the moment the concessional contribution cap has changed from July 2024 to $30,000. So your employer, let's say if you're working $100,000 you're making, your employer would be making contribution of 11.5%, right? So that would be used as your income for calculating servicing. And the other part would be, let's say you're making you're doing a salary sacrifice and you're making extra voluntary contribution, and if there's a consistency of that contribution, then we can consider that as an income as well, right? Moving on to the non-concessional contribution.
Then small question concession when we are in this topic. So is that there is a like I heard about I've utilized last 5 years rule in there, right? I think Ankur can add touch base in there. So is that it used to be 27,500 and you can contribute from last 5 years? Could you put a light on that, Ankur?
Yes, so those are the rules government brought. So for people who, for example, mum's gone on maternity leave and they didn't get a chance to build up their super. So to speed that up, they said, okay, if your super balance as of 30 June of the previous financial year is less than 500,000 in total, you can catch up on your carry forward unused cap for the last 5 years. So let's say, for argument's sake, let's say the cap is only 25,000 for the last 5 years, and and someone's on 100K salary. So that means the employer was putting, let's say, average of 10 grand every year in there. That means they have that $15,000 unused cap that has been carrying forward for the last 5 years. So provided, for example, on 1 July 2020, like even now, if I have to put that, so I have to look at my balance at 30 June 2024. If it is less than 500,000, that means I can then go back 5 years and put all those contributions that I haven't put to the maximum cap in 1 year. And again, you would need to sit down with your tax agent to see what the cap is available, because if you go over, then it's an excess cap, then you get taxed at your marginal rate. Then if you already maxed on your non-concessional cap, then you pay even more tax. So yeah, it gets a little bit tricky, and yes, expert guidance is required.
Yeah, just mine example here. Like I had a very low balance because my career was very small, and I switched to buyer agency within like 3-4 years of my career. So
Yep.
when I switched, I think me and my wife combined balance was $50,000-$60,000. So we consult with the accountant, and they tell us we both can contribute $70,000-$80,000 into the super, and that was a concessional super contribution. So what we did is we dumped like $50,000-$60,000 both of each in the super, and the balance goes to 160-170K, and we were able to buy a property through that, right?
And you would have saved tax as well.
Yes. So for example, I made 200K in there and put 60 concessional super. Is that the income tax will be calculated in 140? Is that correct? Right?
Yes.
Yeah, that's good. So you're saving basically, if you're 45% bracket, you're paying 15% contribution tax. You're saving roughly 30% straight away there in income tax, right?
Yes.
Yeah, great. Thank you. Dan, go on, please. Sorry.
So, Dinesh, to your point, so because you did not have enough funds to actually complete the purchase, right? So that's why you had
Yes.
to. So this is where the second point about non-concessional contribution comes into play. So, if you don't have enough deposit, you could consider, making that extra contribution so that you've got the funds ready. But for borrowing capacity calculation purposes, lender would not look at that, right? So they would just look at, okay, have you got the funds there to buy the property? That criteria will be met. Okay, so then the other factor that lender will look at it is your rental income. When you're buying a property, there will be a projected rental income. So it could be either rental appraisal, or you have your property already rented out. So we would be using that. 80% of the rental income would be used for the servicing calculation purposes, right? The other part is, let's say, if you have a big SMSF super balance up to $1 million, and you just want to use 200K, 300K from it, then if you're earning dividends from the remaining balance, then we can also use that for servicing. But that has to be continuous for at least 1 or 2 years. So, so basically, the point is your employment contribution, which is 11.5%, your rental income, and any other income you're earning, that will sort of make up your borrowing capacity. And then we will expense the accounting cost, the SMSF running cost. For brand new SMSF, it's just like a setup cost. That's what we expense. But if you've got an existing SMSF, we would need to factor in things like insurance, auditing cost, as well, right? So as I said earlier, every lender actually looks at it differently. There used to be a liquidity requirement that you need to have like 5% liquidity requirement of the purchase price before, but now most of the lenders, they are quite lenient. So there's no serviceability, there's no liquidity requirement anymore. You can borrow up to 90% LVR. If you go up to 90% LVR, which is like 10% deposit, then you have to show 5% liquidity. But if you go with 20% deposit, then there's no liquidity requirement, right? And how the lender actually validates this is they'll ask for a payslip. So you need to have 2-3 payslip, and they also look at your super statement, and they'll confirm that you've been receiving that super contribution in your account, right? If you've been very inconsistent, then we have to justify why it is, right? If you're a self-employed, let's say if you're a self-employed and you have not been contributing, then they will also look at proposed future contribution. So we can also use that. But to back that up, we need an accountant to support it, right? And when we calculate servicing, we don't really include any personal expenses or liability. So it would be just done basically whatever asset that you've got under SMSF, that's how the servicing is calculated.
Yeah, it's a personal lending and SMSF lending as totally two different things, right?
Yeah.
So
Yeah, but in some instances, what happens is, people want to buy like 1 or 2, 3 properties. At that time, we can look at their personal debt as well. So the lender can actually check whether you can actually afford to make those extra repayments. In
Yeah.
those instances, we will be using your personal liability, but that has to be done in consultation with the advisor.
great.
Dan, since we're talking about the borrowing, right? If it's the employer contribution, which is the employee is working on a PAYG, looks straightforward. They are getting super monthly or quarterly. What about if the person is a self-employed?
Yeah, so self-employed, because generally self-employed people, like, they don't really contribute, right? They contribute at the last minute. So we could use like a proposed contribution from with the accountant letter saying that this self-employed person will be contributing, but also we need evidence as well that is being done. So it cannot be just like a proposed, we need to have some evidence as well. Right, because it's all the calculation is done not just on the income like $100,000. It will be done at 11.5K, right? And that 11.5K has to be in the super account, yeah.
Great. So I'll just move, bearing in the mind time.
Yeah,
So we are
yeah,
like few minutes.
yeah.
If
So
we quickly go through that. Then.
Yeah, so the case study, so just this case study is, of a couple, John and Sharon. They want to buy property through SMSF. They've already established SMSF and they've got Bear Trust. And John is a self-employed and Sharon is PAYG, working in a company for, a couple of years. Capital-wise, they both have a combined SMSF balance of 220K. They anticipate no change in employment and circumstances. And the capacity-wise, they have been making contribution of $22,000 and $24,000 annually. The rental income, they're expecting around 26K annually from the property, and the accountant is estimating $2,500 as a running cost, and they want to buy property worth 650K, right? So let's just move on to the next slide. I will just explain what that would look like, from figures perspective. So as you can see here, there is one scenario where because normally what I get asked is, how much deposit, how much should I put 20% deposit, or should I put 30% deposit, or should I go with 12% deposit, right? So this will give you some clarity. So the first column is with the 30% deposit. So let's say you're buying a property with 650K. What you would need is you would need $233,000 from your pocket from SMSF, right? So in this instance, they have 220K. So if they want to go with 70% LVR, then there would be a deficit, right? So this is not recommended for them at this stage, right? With 20% deposit, they will have a shortfall because they have 220K and they need 168K. I have not added buyer's agent fees and things like that. So for them, 80% LVR, 20% deposit is ideal. On the right-hand side, you can see the cash flow, right? So this is very important as well. You need to do cash flow just to cover some scenarios where, what if the rental stops coming, right? What if you stop your job, right? Someone was asking question, if you go overseas, what happens? The thing that you need to keep in mind is, if you stop working, the contribution would not come, right? So if the contribution is not coming, then how are you gonna sustain the property and how are you gonna hold it? As long as you've got a good buffer, you're fine. Yeah. But if you're not sure like what you're doing, that's why I think ATO is recommending more than 200K balance. But if you know what you're doing, you've done the numbers, no changes in circumstances, then you can make the call. Next slide.
Yeah.
Have you got next slide, or that's it?
Yeah, that's me. But just on touching base on this here, right? So for example, this is 650, you need that sort of balance. For example, you go with there's a very common question that how much balance do I need to buy a property, right? So short answer for that one is, for example, I'm going for a 600K asset, right? So you need minimum 10%, but recommended go 20%, for example. So 20% of 600K, you're getting around 120 as as a deposit plus expenses. So you somewhere around 150, 160 that allows you to buy a property. Is that you should do it or not? It's more like we discuss with the financial planner, but that's where the numbers are. If you purchase is 100K, you need like 120, 130 to buy a property.
Because you don't want to incur any financial hardship. Yeah.
Yeah. So that's from a lending perspective, that's doable, right? So even though with 10% LVR, 90% LVR for 600K property within 100, 120, 110, you can buy a yeah. Awesome. So I'll touch base on that, how we can help. Literally, I bought personally a property in SMSF and I'm considering buy second one in SMSF, but we have helped more than 30, 40 clients, 30 clients, I would say, to buy a property in SMSF, right? So we know all the bare trust structures and stuff. We can liaise with all the professionals like Ankur and Dan that, right entities on the contract. You go through the proper lending in there. So we try to make your process as smooth as possible, right? We can also really asset really depends on your goals. And, some people want to hold the property just 5 years and get their super balance uplift and buy the second one, 2 properties further. So there's multiple ways how you can boost your super balance in there. So the asset class, we can literally discuss as per your requirements. So what sort of requirement? You can go commercial, you can go residential, you can go regional have a high LVR, no, high gross rental yield, but it's little riskier comparing to the capital cities. So all that factors we can discuss with you and can suggest you that this property can be suitable for you, right? And with us, because we are active from last 3 years, so we build a strong relationship with the agents. We can get you a lot of off-market stock. Multiple purchases we are doing is off market. Even though if not off market, on market, we don't let you pay over. It's like we hold your hand and help you buy those properties, right? So we are here to provide end-to-end support to you. So that's where we comes into the picture. I will fast forward. We'll go a few examples. So for example, this property we bought in regional Victoria, bought for 540. So 540 purchase, technically you need like 130, 140 with a 20% deposit. 130, 140 will get you this property, right? 540 K purchase, 470 rent, you're getting 4.52 rental yield. And this asset, we secured the long-term perspective in a mind. The client want to sell it in maybe 10 years time. So we put that in a mind and we did some calculations. And this is one example, right? That was a regional, that's metro. If you want to go less risk, only thing is the gross rental yield drops. There are many capital cities where we can buy based on your requirements. So that's one example in Melbourne Metro. Literally, then this example is regional Queensland, right? Regional Queensland in the market where you get the rental yield of around 7%, right? So again, your risk appetite goes high. Then it really depends on.
Can I hold it? There's someone using the marker on the screen. Can I ask the person to stop it?
That's fine. We are just about to end anyways. So it's really depends on your risk appetite. You're even getting 7% rental yield in regional Queensland in some markets, right? But that comes with little bit of risk. So if you have risk appetite of going asset with high risk, we can definitely help you in there as well. In the end, commercial is there's a bit of things like you can't you can buy like commercial as well in super. This is my personal purchase. I bought a warehouse in 485K. That's in a suburb called Epping. Literally one of the very good suburbs in Victoria. I just bought it for 485 and I used concession super contribution to top up my super balance. And I was able to buy, right? And difference when looking into commercial asset and residential, commercial is more like all the outgoings are paid by the tenants. So even the gross yield may not be bit different, but net yield will be different because all the outgoings like your insurance or your starter fees, if there is any starter in there. In some cases, land tax can be passed on to the tenants as well. All these things, your water rates and all that can be passed on to the tenants. So your net rental yield is better. So we can help you securing assets like that as well. So we are well capable of this. So that's pretty much this is a common asked question, but we'll go with some questions before, like we can ask to the audience for any questions. They can unmute themselves or go through a question. Or we have a lot of questions in the chat box. Manish, how you want to do it?
I think just a recap, like when we did the registration, we got heaps of questions. So the most commonly asked question has been put on the slide, and most of the things has been covered up in the presentation, right? So most of the answer has been already been covered up. But if they are something specific, and even in the chat room, we have covered a few of them. There are some questions which are specific to an accountant or to a broker that has been covered up. Some personal scenarios has been coming up, and just because of SMS and the compliance thing, that's those type of questions we need to look into it on a one-on-one, maybe sometimes offline, right? So we can go from here. There's heaps of questions. We can time box. It's 7:28. For next 5 minutes, we can take some questions.
Yes, I think we have one hand raised. Samsung. I don't have any. Could
Hi guys, how are you? My name's Gurpreet. So thanks a lot for putting this webinar. I hope you guys can hear me. There's just one question from me. It's a little bit different. Do we have any experience in regards to having insurance for self-managed fund trustees? So what I'm saying is, me being from public service, always had a insurance, life insurance, and pre-injury or injury insurance through my self superannuation fund. But since we created self-manage, I have to still keep my superannuation fund active, so my insurance remains active. Do you have any specific recommendation for us to just have one insurance through self-managed fund, so I don't have to pay for two fees and like that?
Ankur, you want to answer that if you have any
Yes,
experience?
look, this is a common scenario, and usually when we set up a new fund, we do tell the trustees to go check the insurance. For example, if you had that policy going back, 10 years or 15 years, and in that meantime, you have developed some sort of health condition, the moment you roll over your balance from your industry or retail fund to the SMSF, 100%, your insurance automatically ceases there. That means you need to get a new policy within the SMSF, and that might not cover you for the things that you were covered previously in your old policy. So this is something you need to sit down with an insurance advisor to work out whether, because I know a lot of people, they leave $6,000, $10,000 in their retail fund for the insurance to continue there, and then they run their SMSF here, so they don't get the policy under the SMSF. But there are other people who says, yep, I'm going to close down my retail fund completely, and I'm going to go buy a new policy under the SMSF. So it's case specific. What's going to work for you, I think it depends on your individual circumstances, and hence, a licensed insurance advisor is where you should look at.
All right. Thanks, guys. Thank you.
Paul is the next one.
Yeah, it was a very good seminar, thanks. I asked a question in the chat, are there any age limits to contributing to an SMSF as you get older?
Look, Paul, yes, the government did make it a bit easier, I think last year or year before, where the work test is gone. So it used to be people over the age of 67, they had to meet the work test, which was like, 30 hours 40 hours in 30 consecutive days before they can contribute. So they've taken that limit off. So up to the age of 75, you can make non-concessional or after-tax contributions. But for deductible super contributions or personal concessional contributions, you still need to meet that work test.
What age have they taken it up to, did you say?
I think it's 75.
75, okay. Yeah. All right, thank you.
Yep. And again, it's based on your total super balance as well. So if in your SMSF or any other fund, your balance is more than, $2 million, no more non-concessional contributions can be made regardless of your age. So if you have $4 million in your fund, can you make non-concessional or after-tax contributions? The answer is no. So again, it's very complex, case-specific. You have to sit down with the expert or your advisor to work it out what you should do or shouldn't do.
Good.
Ankur, there was some discussion about adding the new directors or adding the kids as a directors in the SMSF. There was a question which came up: if there's any change in directorship, will it impact the stamp duty?
No, because the legal ownership is still under the trustee, which is a corporate trustee. So the change of directorship should not impact on the stamp duty. What Dinesh mentioned earlier with that unit trust scenario, where you have the option of buying those units, the super fund buy units from the related party later on. I think there is some change in that previously there was no stamp duty consequences. Now, apparently, when you transfer those units to the super fund or fund buys the units from the related party, there's stamp duty considerations. So yeah, that again needs to be looked in detail.
Ankur, I just saw a question here. Is the buyer agent fee covered from the SMSF balance? This is a common question that I get asked, but
yes, the short answer is yes, because it is related to the property that the fund is purchasing. So it will be the fund can pay for it, but because it's capital in nature, so it will be added to the cost base rather than on the revenue account.
Yeah. So it's similar to like how you get calculate how you put pay the stamp duty. It's similar to
Correct.
that, right?
Similar, yeah. Or initial financial planning advice, that's also capital. It's not
and building and pest inspection cost all goes in that acquisition cost, not an ongoing maintenance, right?
Yes.
So that's good. And we have a SB here. SBI phone. Or maybe we go to the next one. JK.
Hey everyone, great webinar, guys. Quick question. Is it advisable or recommended to get depreciation schedule done for investment property, residential investment property under self-managed super fund?
Very good question, Ankur, if you can answer.
Yes. Similar to properties held outside the fund. So, you know, if the depreciation is giving you tax benefits and you have enough income to absorb that deduction, then yes, certainly should look into it.
Great, thanks.
one thing I would just like to add as a broker is I get asked a lot of times is, can you actually extract equity from the property and buy another property? You can't actually do that with super, right? So it's very important to have a clear strategy of your retirement goals.
Yeah. So is it Dan, for example, if you want to refinance it, so how does that work? So if you want to go with the different lender.
Yeah, so you can refinance if it's a dollar-to-dollar refinance, you know, but you can't pull equity out if there's a growth in the property. So you can do it. If there's a better interest rate, you can move the bank. No issues.
You can move the bank, right? And the balance will be decided on the day of settlement. What's the balance is, and the same fund moves to them.
So that's kind of like a bad news, but another thing which is good, especially when it comes down to commercial properties, you can actually lease commercial properties to yourself. So if you're running a business, like for example, I'm an accountant and I buy an office in my SMSF, my business entity that running the accounting business can lease that property from my super fund. The only condition is it has to look exactly what it would be if the property was leased out to a third-party tenant. That means arm's length. You gotta get the lease appraisal and stick to the rent, monthly repayments. It should exactly look like as if you're giving it to third party. So you can't just go, okay, it's my own funds property. I'll just pay a little bit of rent here, a little bit of rent there. So then it becomes a non-arm's length income, then hence tax at top margin rate.
Yeah. So you can only occupy that property if it's commercial and
commercial.
You can't really occupy the property as a residential, right?
Residential, no. Even if you put a lease agreement in place, you're paying the market rent. You cannot lease it to your husband, wife, nephew, niece, uncle, auntie, nothing. So we call that a related party in technical language. So it has to be. But what the super fund lets you do it, let's for example, I buy a property and I'm in my retirement. So yes, I can't live in the residential property, but in the retirement, I actually can take that property as my in-specie lump sum benefit outside the super fund, because the beneficial ownership is the same. So me and my wife are the members in the fund, and we are transferring the property in our personal name because we are retired. We can do it. There's no stamp duty considerations. I'm 42, so by the time I retire, government probably will impose stamp duty, but I can only talk as of today. Then once the property is outside the super fund environment, then the business as usual, you can do whatever you want.
Sounds good. So one question which I get a lot, like, should we buy a new property or an old property in SMSF, right? So my take is anyone can add on that. It really depends on your goals. I think there is no restriction. You can buy old or new, right? Depends, because we are planning to hold that property to your retirement age. So for example, you are 40 years of age. and you want to sell it when you retire at 60, 65, whatever the age is, you're holding that property for 20, 25 years. So for that reason, we try to buy not too old asset. For example, you buy a 1990s property, it's already 35, 40 years old, and then add 20 years, it's 60 years old. So again, there is no restrictions. It really depends on when you want to sell and what's your plan with the property, right?
Yes.
And based on that, we buy you the SMSF property. Anything different? Any views on that, Ankur?
Yeah, the only question sometimes get asked is off the plan property. So, you know, some people say, well, I can buy land and buy the property. So yes, you can do off the plan, provided it is a single acquirable asset. That means the contract needs to be one. So your builder must own the land. So they give you one contract. So it's not like you sign the land contract with the A party and then they sign the building contract with the with your builder. So that's not allowed. And usually, and Dan can confirm, the banks don't like off the plan in a way, because sometimes the settlement is quite long, like could be say 1, 2, 3 years. And provided if the rule changes within the super and then you can't settle in the super, then what? Hence, generally your advisor will discourage you to do that. But unless you get, I have a client who bought it here in Melbourne in Donnybrook. Porter Davis was a builder and it was almost ready. So it was on the last final stage. So then he bought it as a house and land package, settled within the 3 months. So that was okay.
Yeah, sounds good. Thank you. And we have some hand raise. Kumar.
Hi, all.
Hi. I'm sorry.
Hey, Kumar. Yes.
Thank you. Just had a quick question, guys. Like in regards to the concessional contributions, so as you mentioned, like 30,000 as of 1st of July as of 1st of July. So once they do for the last 5 years, is it once in your lifetime, or can it be done like every 5 years, or like let's say after 3 years, can it do like 90,000 after 3 years? Like what is the rule there?
It's not once a lifetime. So it's always going back 5 years. So if you are in 2025 years, so you just count 5 years going back. So for example, you maximize it or you use the whole cap. And then going forward, if you're not putting up to the limit like 30,000, you only put in 20 grand, and then 3 years down the track, you still have 10,000 from each year left, then you can still do it. The only catch is your super balance has to stay under 500,000 in total. If it goes even $1 more, then it restricts you. But that's all, again, depends on the year. So if you're doing it now, we're looking at your balance at 30 June 2024. If the market has a downturn and the balance becomes $499,099, it's under 500,000, it still opens up the room for putting the contribution. Even though after putting the contribution, your balance will be over $500,000, that's irrelevant. We're only looking at 30 June balance.
Right. And is it per member within the company, or is it like, is it per member?
Yes, so it's not applied to the super fund. It's your individual limit. So the number
That's
of
the 500K. Yeah.
Everyone will have their own limits. Yes.
Yep. Cool. Thank you. Thank you.
In there, right? And the property is 600K and I have a debt of 300K. How are they going to value the property every year? Like how it works? Like how do they know that I have a 500K or more or less?
Sorry, so I missed a few initial words. I think there was a bit
so
of
I say I have a property, for example, that property values like 600K, for example, right?
Yes.
And I have a debt of 300K. So my kind of super balance is 300, right?
Yes. Yes.
So when you buy, when this rule of 500K kicks in, like how someone can do they value the property and see the loan and see the difference for 500?
Yes. So the value of the property needs to be every year. So the ATO is now quite strict on the valuation. So if you deal with your SMSF auditor, they will say, go get the valuation. In the past, we used to get away with valuation getting every third year. Now it's like every year. It doesn't need to be a formal appraisal, just an agent appraisal with listing some comparable sales, so that you are showing the fair and accurate value on the balance sheet. So when the tax return is lodged, that's when the ATO knows what's your total balance is, because in your member statement, you will be reporting that every year you lodge your return.
You're mentioning the asset value and your liabilities, and the balance is your balance kind of, right?
Yes.
Makes sense. Makes sense. But we have Samsung SM.
Dinesh, I need to jump in over here. We have already over the time, right? So we can either time box for another 4 minutes.
Yeah, let's go till 7:45 and we can just stop in there. Right.
Good.
I'll go again, share my screen so that everyone can see our details. Does anyone want to note down that? Yes.
And there was a question about it, like they was looking about the details of the speaker. So here it is. You can use it.
Yeah. And I think, is it JK? JK, you want to go?
Yeah, thank you guys. Again, this is Gold. I'm here again asking a second question. So quick one for Ankur. So if you have investment residential property under super, you did mention that after you retire, you can transfer the property under your personal name without attracting stamp duty. Is that correct?
That's generally is correct, but again, if there's any change of the stamp duty laws, I'm not aware of that. But generally, if the beneficial ownership is the same, and I'm telling you from experience in Victoria, but if the different states have different rules, then that you probably need to check with your solicitor to see that's the case.
So generally, if you sell from your super after you retire, then there will be no capital gain tax. That's
Correct.
what I believe. Yep.
Yes.
Can you also transfer the property to your kids instead of yourself after you retire?
So you see, transferring to the kids, if you're taking it as your benefit, so then it's hard to argue that you're transferring the ownership from the super fund trustee to your kids. So then that's going to be a breach. I think it needs to be a two-stage process where you take that ownership first as your benefit payment, and then if you want to give it to your kids and all that. But yes, I get it. There's going to be stamp duty consequences, which will be anyway, because even if the property goes straight from the SMSF trustee to your kids, they will be paying stamp duty. But if you can avoid, and there is no stamp duty from super fund trustee to yourself, and then you transfer to your kids, stamp duty is still there.
Yeah, great. Thank you.
SB? Sorry, someone else. Yes. Yeah, go ahead.
Just a quick question to Ankur. Ankur, just in case if you got a property which is well paid off and now it's generating income, what happens with that income? Can we use that income for a second property, or we got to start again, make a new bay trust and a trust, the whole setup again, and use that extra fund?
It depends on how much cash you have. For example, if you're saying that the loan is paid off, now the rent is coming into the fund and you're making contributions over the last 10 years and the fund has sufficient cash to go buy property outright, then yes, there's nothing stopping you. You don't need to set up the bare trust, because bare trust only comes when the borrowing is in place. But if you still need to borrow, then yes, the fund's income that's sitting there, or the cash balance sitting there, goes as a deposit, and then the banks will assess you on your serviceability again as to see how much contributions are coming and whether your LBR and the repayment all stacks up. Is that right, Dan?
Yeah, that's
fantastic.
correct. That's correct.
Yeah.
Yeah, really, thank you.
I think we have covered enough. I think any questions, anyone, please reach out to any of us. Depends on what's if it's lending related questions, go to Dan. If it's structure related questions, go to Ankur. If it's a property related, that how we can help you buy SMSF properties, me and Manish are just one call away. All right, so just call us and we can discuss that in details. All right. Anything else from you, Manish bro, before we wrap up?
No, just want to add, like all the details will be shared by the email. There was a little bit of a hiccup. My apologies for it. There were some issues with the link, but glad like people were still able to punch in the meeting ID. So my apologies, but yes, the details of all the speakers will be shared by the email along with the recording link, right? So that will be coming to all to you guys by tomorrow.
Yeah.
So let's make a call, right? Thank you everyone for the time, and I wish you best of the evening. Wonderful. So
thank you everyone.
Thank you,
Take
guys.
care.
Thank you.
Thank you.
thank you. Bye. Dinesh, you can stop the recording.